Hey guys, welcome back to Sharks Academy, and in today's video, I'll be going through with you the various major pairs in the forex market. So let's start off with the dollar index. You can clearly see that we still have the same bias moving on to next week, right? We are expecting some sort of consolidation here, eventually to tap into supplies over here or even over here. And then this should be a sell to buy move. All right, and we're going to expect the same thing over here, a move higher, a sell off before the buy, right? And of course over here as well. So this gives you a general picture of where dollar will be moving. So how do we use dollar index and pair it with the other dollar pairs? Imagine if prices were to tap into this level, we should expect some sort of reaction from the dollar, right? So this reaction over here doesn't necessarily need to take out lows. This move over here, just like this, right? This reaction on the lower time frame, on let's say for example euro dollar, is going to expect some sort of opposite movement, right? Because if dollar index is going to expect some sort of sell reaction, then we expect the same for euro dollar. So imagine this happening on the daily. If you were to go down to the lower time frame on the euro dollar, you're going to expect a pretty huge movement towards the upside. Okay, so this is how we actually use the dollar index and pair it with the other dollar pairs. Next up, we have the Aussie dollar. So you can clearly see that we took out highs now. So where do we expect a move? Right, we expect sells again because overall we are bearish. You can see this is the break of structure. This is a minor high, right? Because this is a high that was created before it break this. So this is a minor high, and from there we're gonna expect sells. So where are we gonna sell from? This block, and of course the extreme. Okay, so these are the two best selling areas to look out for, and along the way you can look for buys into this level. So let's go down to the lower time frame. So clearly on the 4 hours, you can expect some sort of buys from this area. Because now where is this framework that we are working as? Look at this break of structure on the 4 hours, demand area, right? So this is step number 1, break of structure. Step number 2, your demand area. So it depends on how you want to play this, right? You can use the entire block. You can use this, you can use the wicks, you can cover this, you can go down to the 15 minutes to look for the best POI to work with, right? All of this. So then again, it depends on how or what is your trading entry criteria, because if I'm someone who is playing the formations on the 15 minutes time frame, this is going to be what I'm looking for. And then all I have to do is to wait for the 15 minutes to give me a shift, right? Like this. Okay, so the problem with putting my demand area at the last refined area is that when prices starts to shift, you may be still waiting for this demand to get tapped in, and then it starts to play out and runs the high. Okay, and then you are left here wondering why this didn't hold. And then as soon as prices breaks the high over here and then starts to run off, you are still waiting for this POI, and all of a sudden when it comes back down, you got involved and it starts to break down. So why does this always happen? So first thing you need to understand is that when prices starts to shift, you have to shift with prices, right? You do not just wait over here. And as soon as prices takes out this high, your POI should be any of this leg over here. All of this should be your POI. So this is not valid anymore because we broke structure towards the upside. This is the low that broke the high. So this is not valid anymore, right? So yes, price can give you some sort of reaction here just to continue going lower because we tap into a high time frame sell area. Can you see? So most traders do not look at market this way. They don't view it in a high time frame perspective. They go down to the 15 minutes and they just see what they want to see. They are just looking at price this way. Okay, so prices taps into some high, but for them, they do not understand that it tapped into a higher time frame sell POI, right? So when it taps into this, they get excited, they get involved in the market, but this is just a continuation towards the downside. Okay, so then again, when price starts to shift over here, understand where this low came from. So if you were to play the 4 hours, you understand that this low was created because it taps into this POI, and this is valid. What you did over here on the 15 minutes is to refine it, but it doesn't mean that prices should and will always come back to the refined area. So I hope you understand this point. And of course, if you are playing with buy limit orders, then you want to fight for the best price as possible. So this is now valid. Okay, this is a valid play because you are trying to place limit orders. Okay, and it is a huge difference if you were to place a buy limit here compared to placing a buy limit here, because now over here you're risking 14 pips, over here you're risking 36 pips, and that makes a huge difference. So ultimately, ask yourself what kind of entry criteria you are looking for before you look for POIs, before you look for confirmations. So next up, for Euro Pound, we broke structure here. So ultimately, we are still bullish from this leg. Can you see this leg? We are still bullish at the end of the day. So now prices starts to change character here. We made a sell-off into this demand area. So this demand should create highs. I recall we broke this level, we tap into demand. This demand should create new high. Okay, but once it fails to do so, which means to say if prices starts to deliver lower, then we are bearish. Okay, so now what did we create over here? We have liquidity pools over here. We have this buy side liquidity here. We expect the run towards this high, tapping to supply. And if this supply starts to change character again, then we are looking for sells, right, into this demand potentially. Because right now we're on the 4 hours time frame. We take out highs, we tap into supply. If we see a change of character here, we can play the sells, right, running this liquidity into this demand. Okay, and when this happens, this low failed to create high. Okay, because this low should create high, but if it fails to create high by means of the change of character here and the break of this level, then we expect a rundown. Okay, so this demand may not hold, but this demand could give you a reaction like this. So then play with what you see in prices, right? If prices starts to switch, you can go for buys. But if prices fails to change character, right, it reacts, it breaks down, then this is your flip for entries towards the sell side. So now we are definitely ranging currently, right? We're going to move into this level or this level. So play accordingly, see what prices gives you before you take the sells or buys. So next up, for Euro Yen, pretty straightforward. We broke structure towards the upside over here. So ask yourself this question: where is the low that created the high? Ultimately comes from here. So where is your range? This is your range, right? The low that created the high. So now, where is your demand area to play with? Go to the lower time frames to look for demand areas. Okay, this is buying high. So ultimately, you do not want to buy so high, right? No doubt prices may turn from here to run the highs. We do not know for sure. But if you want to be a buyer, we want to buy low. Okay, we want to buy. This is the best possible buy area. All right. So this is your first buying area. The second one would be here, potentially. Right, so these are the two areas that I'm looking for. And of course, you may have some sort of a demand area inside this level, right? We do not know for sure. So what we're going to play is, we're going to expect some sort of shift over here to get involved, and the same thing over here. So now, when prices starts to break lower, let's say we see this, then we are shifting our buyers currently to sells, because we tap into demand. Demand should create high. Demand fails to create high. Swept liquidity broke down. This is a definite sell. I may even place a sell limit here, right? Depends on how big the range is, because if let's say we are on the 4 hours time frame, if I cover the entire 4 hours supply, I may not get a good RR, you know. I may have this, and then you are risking like 60 pips, which doesn't make sense. But if I want to play the sell limit game, I may refine this 4 hour supply into a 15-minute supply, for example, and just place a sell limit like this. And all of a sudden, I have like a 15 pips stop loss, and then I can target the low for 1:10 or 1:15 or whatsoever. So then again, depends on how you want to play it. Otherwise, usually you want to go down to the lower time frame, go over here, look for the 15M shift, play the supply, right, on the lower time frame. Otherwise, go inside here again and play the 1M shift. So this is going to be the same thing. So over here, we have euro dollar. Again, we are bearish from this leg, right? Because we have this last point of supply. So now prices can do two things from here. This is a supply. All right, can you see this reaction? So this is the reaction. This is the sell to buy wicks. Okay. So now prices could easily move up from here, tapping into this supply, shifting bearish to run this liquidity, right? Because we broke structure towards the downside over here, right? This is the first scenario. Again, we have a supply here. We reacted. We broke upside, okay? we came back down. This could be the one that runs into the supply that we're waiting for, or it could break higher. We do not know, and that is why we have to see how price delivers and reacts over here. Otherwise, we may have this reaction, pullback, right? This is a pullback. Can you see this inside bar? Taps in, reacts. If it breaks down over here, we could potentially catch sells, all right, to run the lows here. Okay, so this is the entire range that we could play with. All right, this is the supply, the last buy to sell. You can refine it to the last one over here, even by the red POI, right? So it depends how we play the game. So yes, we have this supply here. We expected some shift here. Didn't happen. Prices started to turn, right? So we just play and adapt accordingly. If we see the flip happening, then we can catch sells to run this low, all right? And if it breaks this level, we can wait for a pullback to continue selling. Then this POI will not be needed or being used, right? And we just follow how prices are being delivered. If this keeps going lower, we keep selling lower. So the pound yen analysis stays the same. We broke structure here, right? We tap into this buying range. So where's your buying range? This is the low that broke structure, right? So as soon as prices taps into this entire sell to buy, we are ready to go long. So this is just a refined area, right? I think this is on the weekly. Yes, this is on the weekly. So when prices taps into this, we are already in the buying zone. Okay, so let's go to the daily again. So now, ultimately, I'm still trying to sell, all right, because we broke here. Okay, we took out highs, we took out lows. I want to be a seller here. All of this should be liquidity. Okay, so if I want to be a seller, I want to position myself to be a seller over here. Shift, sell, runs this low, shift to go higher. So if you were to look at it on a high time frame perspective, this is basically like this, and you're still bullish, right? So for pound dollar, as mentioned previously, we are expecting this low to get ran, right? This is liquidity now. Okay, we broke structure towards the downside over here. So once this gets broken, when we tap into this supply, and if prices started to shift here, we expect this level to be the next liquidity pool. So if you break down, you can trade a pullback into any supply over here and look for the same three-step process, right? All the way down into this level, and then wait for the buy. So why are we waiting for buys? Because we broke this level. Okay, we broke structure towards the upside. This is just a retracement leg, and this retracement leg could be played, right? We can trade the retracement leg into this demand, and if it shifts, you can catch sells. I mean, you can catch buys, sorry, into this liquidity pool. Next up, for the New Zealand dollar, I'm trying to sell high. Okay, I'm going to sell over here and over here. So the analysis stays the same if you watch the previous WMA, right? So this, we took out highs. We expect a temporarily bullish movement into this level before selling off potentially. So let's go down to the 4 hours time frame. And you can see we wicked out. We wicked out over here. All right, this might be a sweep. And if prices were to break this low, then we're going to trade the sell into the buys. All right, so understand the fact that we have a demand here. We can play off this reaction. This demand could potentially run higher. We do not know, right? But if this demand fails and breaks down, we could sell here, right? And trade the temporary sells into the buys to go higher. And ultimately, again, this is your low, high, low, high into what? A bigger sell. Can you see? From this high, low, high, low. So if you were to draw it in this manner, it's going to look something like this. So can you see that now ultimately this break of structure towards the outside is just a retracement leg in this entire sell move. So ultimately you still want to be a seller, but you want to participate in the market, right? You are looking at prices on the 4 hours time frame. You could play the lower time frame and still make a run out of your money. So now, pretty straightforward for dollar Canadian. We swept liquidity, we break structure, and currently tap into this demand area. So this is the same analysis as the previous one. We expected the run into this demand area ever since over here. So now when prices taps into your demand, you have several ways to play this. If you are a daily swing trader, this could be your entry, right? 150 pips. And your target will be this high. Not too shabby, right? You're waiting for a 1:3 ultimately. Or if you're not so greedy, you can aim for this high because you understand the fact that we have liquidity here. So this is your first point of target if you are a daily swing trader. But if you are trying to play the lower time frame, of course, you're going to wait for the lower time frame. Right? So now, look at this. We have a 4 hours sell move. This could continue to go lower. We do not know for sure. So if I'm playing the 15 minutes over here, I have to respect the 4 hours structure, right? Because we broke structure on the lower time, on the 4 hours time frame. And this 4 hour time frame should continue to deliver lower. So if I were to go to the 15 minutes time frame, you can see clearly took out lows, took out highs. I could potentially buy over here. Right, this is a bullish move potentially into my 4 hour sell range. Okay, so you can clearly see that this is a 4 hour sell range. We have this, and we have potentially the extreme over here somewhere. Okay, this. So this is my 4 hours sell move, because this big of structure would have a retracement to go lower, right? We do not know for sure, and over here as well. So it depends on how you play it, right? This on the lower time frame is a retracement leg on the 4 hours time frame. Okay, so how do we know for sure whether this could move up potentially into this area of liquidity? If the 4 hours broke structure towards the upside, like this, then we can say that, okay, I'm bullish, right? This 4 hour is now in line with my entire framework, because we broke structure upside. We are waiting for the 4 hours to be aligned, and currently this is not aligned. When this happens, then yes, we are aligned, and of course this is now pro trend. We are going to trade this 15M shift, run up this liquidity, right? Broke structure again, pull back, go higher, and this should continue to run. Okay, so when we take out high over here, all the lower time frames, higher low, will be taken out, and this could potentially be our demand to trade higher. And of course, the same story is going to build the same, right? We're going to expect a run up. So we do not necessarily expect prices to tap back into the extreme. Prices can just move off from here. We do not know for sure. So then this is the game plan for dollar CAD, right? Again, we expect some sort of low time frame shift. If you want to play the 15 minutes, you're going to expect a move into this supply, and this supply should still hold. No doubt we tap into a higher time frame demand area. This is your 4 hours break of structure, and of course we expect the 4 hours to hold until it fails. Okay, if you're conservative, you want to wait for 4 hours to break first. You want to see this getting broken. Then now we are going to trade the 4 hours bull trend into this liquidity pool, into this ultimately. Lastly, for dollar yen, we have this supply, right? This is the extreme. So we expect some sort of sells from here. So maybe you can play the 15 minutes inside, because you can understand where's your 4 hour range. This is your 4 hour range, right? We're going to play the 15 minutes here, and this 15 minutes could easily run into our 4 hour range. And at this point of time, you decide whether you want to take your profits out or potentially let this run lower. Okay, because prices can easily move up from here, because this is 4 hours bullish. And over here, you can see how prices are delivering. This is 4 hours bullish for sure, right? So ultimately, our framework is bearish, but this is currently bullish, and we expect this to run into the 4 hour range. So if this fails, okay, let's say we took a sell on the 15 minutes, and this taps into the demand, and it fails to go higher, and instead break down. Then you can play the sells of the extreme of this level to continue the sell bias that we have actually, analyzed since the start. Right? So this is how it works, and of course we are going to expect sells ultimately. But if prices decides to go bullish, then this high should be taken out. Okay, so let's say if prices were to blast through, then too bad, right? Nothing for you. There's no entry over here. But now we have a bullish leg that started from here. So anywhere inside of this are all buy areas, because now prices goes like this, right? We broke through, we want to buy low, we want to buy over here, ultimately. But if prices were to react from here, break out, then this is your flip. Okay, so watch closely. We have this bullish move. We tap into this supply. This supply did give us a reaction as we expected. On the 15 minutes time frame, we have a shift. Great, we caught sells into this buying range, and if it taps up from here, then this now becomes our flip. Okay, reaction, demand, and then the confirmation to go higher.